We have CPI, we have the producer price index, consumer price index. We also have Jerome Powell speaking this week. So it is certainly a very big week in terms of economic data. And I think the market is very, very curious to see where inflation is at currently. I mean, the thing is, the dollar index has been ripping to the upside here recently, really reversed course on this sort of very strong downtrend that we saw for several months. A couple reasons for this that we see, the dollar maintaining its strength is, U.S. economic data has come in a lot better than what was forecasted at this time. Many people have fallen to the idea or sort of fallen short on their predictions that the U.S. economy would be in a really bad spot by now. It's actually doing pretty dang good, especially when compared to peers globally. The U.S. economy continues to be, not perfect, and not everybody is, in the perfect situation. But, you look at some of the metrics that we talk so frequently about on this channel, and, you've got GDP still at 2.8%. I mean, yes, it missed the forecast for 3%, but 2.8% growth is still pretty good. I mean, you've got strong GDP growth. You've got PMIs, on the services side, which is basically asking a bunch of purchasing managers, hey, what do you think about the economy going forward? And most of them are saying that they're looking strong towards the future. So you've got some strong economic reads. Retail sales numbers, we get fresh numbers here this week, so we'll hear a little bit from the consumer on that front, right? Are people out there spending money? So there's a lot to unpack here, but overall, I would say the state of the U.S. economy is strong enough, and with rate cuts still expected, things look pretty okay, in my opinion, for stocks, which is why stocks, we take a look at them, they're trading at all-time highs, right? You've got the S&P, the NASDAQ, the Dow Jones cresting their all-time highs as we speak, and that security level is really hurting the story for gold. So I want to talk about gold, I want to talk about stocks, but for now, that U.S. economic strength and the return of Donald Trump as the president has the dollar moving higher. Why would the dollar move higher on Trump? Well, if Trump comes back in and he imposes a bunch of tariffs and, he gets the U.S. economy, going stronger than it is even, it's possible that the U.S. economy continues to really strongly outperform its peers. And that in currency land means dollar strength for the most part. That being said, Donald Trump is also a man that wants rate cuts to be happening a lot, right? He wants low interest rates, which does kind of hurt the story of the dollar. But again, the market also sort of suspects that inflation could kind of re-accelerate under Trump. A lot of people sort of speculate that the tariffs could be largely inflationary. We'll see. But the point is the market sort of sees that, and that is one of the reasons I think why the 10-year yield is trending up. This is a large contributor also to the dollar strength recently. Now, where am I in all this? Well, I think the dollar kind of continues its upward course. There's nothing here currently that tells me we need to get real bearish on the dollar. This thing looks very strong. So for me, if we get pullbacks, there's some names on the currency pair side of things that I like. But I'll tell you, one of the things that I don't like is gold. I'm just not as interested in gold as I was when we saw the dollar falling, right? When the dollar was trending back here, I was trading gold left, right, and center all day long. That was my, I was very bullish gold. Since then, I've really changed my outlook, since the dollar strength is just sort of unending at this time. Gold also was thriving off the uncertainty of the election. And so for me right now, the fundamentals just don't have the same spark that they once did here this year for gold. That's not necessarily saying I think I'm just going to go get short on gold. It takes a unique scenario for me to really short gold. I don't usually short it. It's something that typically over the very long term does go up. There are windows of time where I may short gold, but it is pretty rare. I typically only like it long, or I'm not trading it, right? So for me with gold, There's no trades right now. I would not be surprised if we come down and test this level, and if we get a weak, if we get a CPI number that is not favorable, meaning likely higher than expected, right, which would postpone rate cut expectations more, gold could go back to test 2560 even. In terms of momentum, it favors the sellers here. We had a huge sell-off, a bounce in the price of gold, but sellers came in very strong. And if we close like this today, price action is telling me that's a bearish looking chart in the short run. So I don't love gold right now. I'm very much on the neutral to slightly bearish side, which is exactly what the Edge Finder currently has listed for gold. It's getting a -2 score, which is a neutral score with just a very slight lean towards the bearish side.
Market analysis, free trading courses, Edge Finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Bitcoin has been a crazy trade here recently. It's only got a +4 currently, but at one point it was giving me a bullish reading on the Edge Finder, and I went long, and I've just been trailing a stop on this thing. This thing has been a monster here recently. S&P 500, NASDAQ, both getting bullish ratings on the Edge Finder, so I maintain my bullish outlook for indices based on everything we just discussed. Again, economic data looking okay. The return of Trump is being celebrated by markets in terms of just strictly, lower taxes for businesses and less regulation. The stock market's obviously going to love that, and has, just taken off. I think it was the best week for stocks last week that we've had all year long, despite having an incredible year so far. So, just a crazy week last week. But again, I maintain kind of staying bullish on indices and the Bitcoin world. I have positions on those that I'm just trailing stops. In fact, I probably need to see, this is tricky for me. I don't know what to do with my Bitcoin stop loss trailing, so I'm just going to leave it really loose. I know I'm taking on, the risk of this thing coming back, but I'd like to see this put in a higher low for me to find a way to really trail a stop loss on Bitcoin, because I don't know where this thing is. I don't want to just trail it here. If I was going to trail it, it'd probably be there, but I like the idea of just holding it loosely, letting some sort of higher low form, and then I could trail a stop. And if that means the market just completely reverses and I lose all my gains in Bitcoin, or a big chunk of them, then so be it. As a trend follower, someone who uses trailing stops, that happens to me sometimes. But I'm not going to trail this thing too tightly when I don't have a clear spot to do so. But yeah, we're looking at Bitcoin at 82,000, guys. That's crazy. The momentum on it is very strong. I continue to like that trade quite a bit. I'm just trying to do as little as possible in this Bitcoin position, because I know, my rules here are wait for some sort of higher low to form in order for me to really justify trailing a stop. Because this thing could do something like this. It could just whip around and continue. And I really don't want to over tighten my stop loss. I want to wait for the market to give me that higher low to really trail that stop.
I'm watching the top setups.
What you got on here? What are you liking on here?
I like that Euro Yen, Aussie Yen has a bullish bias at a score of 7. Because when I go and look at the charts, Euro Yen is currently giving me a small little discount. So I'm thinking, what about that tomorrow?
Yeah, that would be nice. I would be okay with that, Ivan. I've got a long position on Euro Yen myself. So are you going to join me? Or are you liking Aussie Yen more?
Um, you will probably find me an Aussie yen trade in the next milliseconds. But yeah, I'm with you on that one. Either current or back down there, but both are good. My only problem with Euro yen, I want and I need it to reverse because all the other yen pairs are much higher and much stronger. Euro, CAD, Aussie, New Zealand, pound. So Euro is the weakest one. Leading me to the next one, Euro dollar.
Yeah,
It's falling.
I just pulled it up. That thing is really taken off to the downside here. 1.063. What are your what's going on? Why is the euro so weak?
I want to ask you that question.
Did they didn't have any data this morning, did they? No.
I think it's very simple. I think the math is simple. Can I just give you like a new theory here? I think that America was Brexited, if you know what I mean.
Yeah.
They have voted for a better economy, which in my terms means lower inflation, but they voted for Trump, and whatever he's going to do now, as presumably, as far as I've understood, increase or create tariffs, that's only going to create inflation and only going to make it much worse economy. And where is those tariffs going to come to is, okay, Europe is going to be one place, but Europe is trading with America, which is the biggest trading partner. So Europe is going to be one having a lot of toll barriers to tariffs to America, but Europe is going to create their own. So Europe is going to tank. That's why I think Euro is going to go down right now.
Yeah, it would make sense. And a lot of the foreign exports that Europe, the UK, etc., does go directly to the US. And if those exports are, taxed at a higher rate, tariff, situation, that makes it tricky. That hurts their income. So could hurt GDP forecasts, right, for some of these places, making the dollar strong. And I think we saw something similar to this in 2018, because this isn't the first time we've seen Donald Trump as president, obviously, but we've also, seen back in 2018, there was a strong sort of surge in the dollar for some time. So I don't know. We'll see how that plays out. If there's a bit of a, dollar strength trend that's going to stick around for a little bit. It also very much depends on, for this week, the CPI, PPI stuff. Do you think we could get some hot prints for CPI? Is that possible?
Well, this is far into the future, right? So, because if Trump comes in, in January, then creates tariffs, I don't know if that's ready by that time, but if you say that they are effective by March, then from there out. And then Jake says the idea is to bring production back to America. That's a very good idea. If US production was the lowest cost of operating. So, and I third something that John Deere has to bring back production probably to America. Also, John Deere is going to be so expensive with US salary that it's going to be unattainable. So the problem is with US production, America first, and anti-globalism is that currently with the higher prices that you get from China, the US price is even more ridiculous. So yeah,
I'm very curious to see how it all sort of shapes up, but at least in the short run, it seems to be creating a lot of momentum for the US dollar. You also have, small caps roaring today, up 1.2%. These are a lot of domestic companies. So as you mentioned, anti-globalism or America first, whatever you'd like to call it, in this short run seems to be really getting some domestic companies that could be involved in that manufacturing, etc., a little bit more excited. That being said, gold is lower here today. Silver, commodities in general, lower today. Look at oil down under 70 now. What do you think about this, Ivan? Does this help the inflation story?
That's a very funny, interesting. Well, okay. Okay, I'm just trying to create a story because there's two ways to roam here. There's two ways. There's technical analysis and there's stories. My story is I assume that the market has kind of lost trust that China's going to get back on. But if they're also going to send Europe down in terms of euro dollar, then oil should also go down. But this lowers inflation, at least pulls it lower. So this actually, at this point of this time of today, is creating like a drag down. So that's a very interesting thing because oil would go up with inflation, the market goes up. I think that 1.0 is a very easy target.
Yeah, for the euro dollar.
And I would say now, if I can hold a euro dollar trade or Australian dollar trade against dollar from now, that's kind of what people should be thinking. And because what's the reaction? The reaction generally is, if you have analyzed it enough times, that Aussie, mainly, then New Zealand, then pound, I think, and then euro, and then CAD will all drop in that order. So shorting Australian dollar against dollar is kind of your best bet going forward, because one, when higher rates, higher US dollar rate, it hurts those who have the weakest economies, and also emerging markets. So yeah, that's a bearish emerging markets, bearish commodities, bearish. Yeah, those countries. China.
Very interesting. I mean, your point with the Australian dollar being the number one sort of loser, I guess, in that scenario makes a lot of sense because, Australia, as you just discussed with the commodity side, is a heavy exporter to China, to other places. They have a ginormous country over there full of minerals, resources, things that they export. So if international trade does get sort of locked up a bit with the tariff situation, that very well could hurt places like this, where, if China's unable to sell as easily to the United States, right, then there you might need less raw materials from Australia. So the Australian dollar might struggle. So very interesting breakdown there. And as you mentioned, a more emerging economy wants international trade to be doing, going crazy. They don't want the opposite effect to be happening. So that's very interesting. And I mean, it seems crazy to think euro dollar could go back to parity after all this, bounce back that we've had. But it seems very possible if you get the Fed starting to talk about pausing rates, which I think people are not expecting, but it could be a story in 2025. I mean, if you want to talk about what could get the stock market to go down 20%, my best guess would be the Fed gets neutral rather than cutting rates.
But Nick, as you see on your screen, why did euro dollar go down to 96.96? What's the story in 22?
Inflation.
Isn't that what we're talking about? Isn't that a reason?
See, this is why I have you on, Ivan. You're my coach. You're my coach too. I love it.
So I'm right. I don't. Okay, I'm not that right, but it's always going to be that you're going to look at inflation, but already now you have to write somewhere on the wall saying, going forward, if you see increased inflation, if you see tariffs coming in, if you see all those reasons that we are talking about now, this is not necessarily that technically falling that way because this is different drivers, but going down to parity is okay. It's a long shot and it's a bit funny to say it, and it's a bit YouTubey. But my point with it is it's a one-way train to whatever lower prices that is. It really depends how Europe, because I haven't noticed it, but I've noticed it in my head now. Europe is the scapegoat and is the one struggling in both scenarios, because if China sorry, there you are. China and America both add tariffs,
Mhm.
and America does to Europe as well. So there's coming nothing from China into Europe because they are struggling, and then America does also not buy anything from Europe. So Europe is not getting anything from China, or
Mhm.
China's doing worse, nothing coming from China, and then nothing goes to America, and it's just that would just lose both ways.
It's
That's
very
why you
interesting.
get a short one.
Things have been pretty quiet. Just grabbed a couple quick winners on SPX. Added some trades into the Pulver Alerts this morning for some hedges and a little bit of an oil trade. I did put a hedge on the MES out through the middle of December. Basically, I'm just looking to see, will we have a bit of a pause or a fade or a backfill on any of this election rip? I have an interesting screenshot to share with everyone. Let's see here. I've got those screenshots that I need. Here we go. So this might be a little bit difficult to read. Man, what is up with this StreamYard? I can't push to YouTube and Twitter. You sons of guns. All right, well, guess we're just doing it on anyone trading. No worries. A couple things. I know the team will be posting some links. Nick and I will be doing a webinar tomorrow morning at 10 a.m. Please join that webinar. It's free for everybody, but you got to register for to attend. The prezo, the presentation slides look fantastic. We got lots of great stuff to talk about. I consumed lots of amazing content this weekend, so plenty of extra talking points. So what you see on the screen right now is the market actions after Election Day. This was from 2016 when Trump was elected to now 2024 being the new winner for this this new presidency. What we show here in blue, and I'm just going to kind of trace this out. In blue is the actual current trade. Okay, so basically we have the S&P. I'll just go if you can follow my mouse here. Okay, so we have S&P, U.S. equity versus the rest of the world, small cap versus large cap, bond yield, real yield, break-even inflation, 2 and 10-year curve, U.S. dollar, Chinese versus yuan, gold, Chinese equities, and Bitcoin. Now, the blue is how things have already started. So it's kind of one of those situations like how it started, how it's going. We won't know this until, the trade is done. We won't know if this is going to be the same thing. And, as we show like, okay, there was a Trump trade in 2016. Well, this is how it played out. Is there going to be a Trump trade that looks the exact same in 2024 to 2028? I have no idea. I don't think anybody does, but it's going to be interesting. So I thought we'd talk about it. S&P started out going up, and over Trump's administration, even through Biden's administration, it was the same. It went up. Bottom left to top right. Okay. Equities versus the rest of the world, however, the Trump trade from 2016, actually the rest of the world outperformed the U.S., which is interesting. Okay, small cap versus large cap, up initially with small cap outpacing and then small cap retreating. Okay, which I think is very similar to what we're seeing right now. Small cap, Russell has been ripping and outperforming. It's been pretty impressive, but I wouldn't be surprised if small caps fade, especially if we have a tougher time with rates going forward. And there's one thing that I'll be talking about a lot tomorrow. That will be the 10-year bond yield. That is going to be probably the most important financing fulcrum in the next like 6 to 12 months, because I think that's going to determine whether or not the Fed will continue to cut or will pause or possibly backpedal into raising rates. It will be the 10-year yield. Okay. All right. Bond yields went up in 2016, stayed relatively elevated. Real yield went up, stayed relatively elevated. Break-even inflation, which I would say this is the one thing that's hard to decipher from 2016 to now, because we are in a very different environment. 2016, we had a trade war. We had a legitimate trade war, but we never were dealing with the same inflation metrics that we have right now. So it shows from 2016, break-even inflation was up and then down and then back up, and it was essentially flat, but that could be a very different story this go around. The 2 and the 10-year, actually got a little bit stronger, which means we get further and further disinverted like we already have been on the 2 and the 10-year. The US dollar shows that it got stronger initially and then faded hard. The US versus the Chinese yuan, this shows inverted. So I'm not sure if that is dollar yuan inverted. Why wouldn't I just say dollar yuan? I'm just going to cross that one off. So if it's inverted, that means that the dollar got stronger versus the yuan. That's what that would be showing. Gold Initial reaction was down during Trump's election in 2016, and then gold rallied back. Chinese equities surprisingly went up, even despite a trade war. Chinese equities went up. Bitcoin went up. So we are seeing some similarities, right? We got some chart alarms going off here. We're at 60.33. Chart alarm is DAL at 62. That must be some fresh highs on Delta Airlines. Yep. I am looking at locking in some profit on my trade on SoFi. I've locked in a trade that's going to get me paid around $14.15. I have a $13 call. I just added this into my personal tracker today. I did a $13 covered call for an extra $1.15 today on all my shares. So if SoFi gets called away, it's $14.50, and I get back about $4,000 in buying power, and I'll turn a nice little profit on SoFi. Now, there's clearly some additional room to the upside. I've got this thing measured out towards $19. I should just sit on it, to be honest, not do anything. But just in case we get a pullback, if it doesn't get called away at 13, I'm going to set a chart alarm here at 13 bucks. Okay, and this will be my covered call level. And what I could also do is by this, let's say Thursday, Friday, I might be willing to also roll my $13 call out another week or 2 or 3 and have it just pay me a little bit more. So I'm going to kind of finesse my covered call on SoFi and see if I can grab another, maybe 50 cents to $1. If I grab another $1, that makes the extra $300 of profit, and I'll keep working that out maybe another 2 to 4 weeks. Okay. Overall, P&L is looking pretty good on the day, hitting a new high again in the portfolio. That's good. 2 for 2 on the SPX today. That's also good. Bitcoin. We talked about buying IBIT last week. I did. Hopefully you did too. If you're interested, we have the dollar, which is going up. Okay. Now, could the dollar be facing some headwinds in the near term? Yeah, maybe. Okay. And this is what I'll be talking a lot about tomorrow. In fact, I'll save that prezo for tomorrow. So make sure to register for the session tomorrow starting at 10 a.m. And it's going to be a lot of fun. I revisited all the slides over the weekend. We got lots to talk about. But I'll get to that 10-year yield because I really think that's going to be one of the most important things moving forward. So dollar is up. Technically speaking, I'm looking at this DXY. I'm looking at this US dollar. Okay, let's say that the resistance is here, right? So post-election, I talked about this last week. If we have an election breakout candle, I'll just give you something very simple to go off of. So we take this high, we take this low. This was kind of our lead up into the election, and we're breaking above this. Now, I will say that the daily candle needs to close above that election high. Okay, so that post-election reaction high, if we close above that, all I'm going to do is this. Let me get into the nitty-gritty here. Let's take this election day candle, box this in right there. Okay, so there's my election candle. I'm going to stack it above, because right now if we hold this breakout, then there's 2 spots that I'd be measuring. Okay, if we have a complete fake out, then I'll put it right here at the bottom side. But what I'd be looking for is this. Let's take this breakout and go up to 2 targets. It's a 50% take profit, which would be around 106.30. So if you're long the dollar on this breakout, 106.30 would be my target 1. And if you're looking to finish that move for a full candle breakout, you're going to 107.19. Target 2. Right? So the way I'd like to see that play out, and you can take this down to a smaller time frame. Let me put a couple of small trend lines in here. So I don't make this like super messy, but if I take a trend line there and trend line there. Okay, so that'd be my breakout point. Now, take this down to a smaller time frame. This would be the box that I'm watching closely. Okay, so if we have price breaking above, if it pauses and goes or breaks out, pulls back to this election high reaction point, and then bounces off of there, this is my 50% level. Okay, and then this is my 100% level as far as measuring the election candle. So don't be surprised if this dollar direction does continue We hit this point. That's a good spot to take some profit, or at least eliminate any risk. If you're long on the dollar, eliminate your risk, try to trap some profit. If it goes higher, continue to trap some profit into that full measured move. Once we get up towards 107 to 107.50, I wouldn't be aggressively bullish on the dollar. I would be looking to take all profit off the table and probably just trailing. Make sense? So I don't want my chart to get super messy, but keep an eye. I mean, look at how that measured move that I drew out here. Look at how that measured move would get us right back into these multi-year highs, right? Lots of resistance right back into this area. Now, if the dollar were to surpass that, I don't see it going much higher than 108. I'd say 109 to 109.50. Okay, and if we called a round number handle, I'd say 110 would be a spot that I would probably be aggressively looking to sell the dollar. But not there yet. I mean, right now it's like we've got our big election candle, a lot of noise, breaking out to the upside. Measure your move. There's a 50, there's 100%. Get back to this multi-year resistance level. If it turns here, then we have an opportunity to sell going into the end of the year or even going into Q1 2025.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.